Thursday, April the 17th, 2025. Welcome back, everyone. This is your 21st briefing here on Finwell Daily Brief.
That's right, number 21. And we've got a really packed session today looking at all the latest market moves.
Absolutely. We're diving straight in. Let's start with something quite interesting, our financial fact of the day.
Okay, what have we got?
Well, it turns out that in fiscal year 2023, the household savings rate in India was pretty robust, 19.8% of GDP.
Wow, nearly 20%. That's quite high. Really says something about, the culture of financial prudence here.
Exactly, a strong savings habit. Okay, so pivoting from savings to spending, or rather, investing. Let's look at the market close from yesterday, April 15th.
Right. How did things shape up? It felt like a strong day.
Oh, it was more than strong. The Nifty 50 just soared. It closed at a brand new high, 23,846.35.
A new high. Fantastic. What was the gain?
A huge jump, 409.15 points. That's 1.75% up in just one day.
1.75%. That's massive for the main index. What was driving that, would you say?
Well, the talk is it's a mix, really. Strong corporate earnings coming through, plus some pretty positive signals from global markets.
Right. That combination often provides a good tailwind. And was it just the large caps, or did we see breadth?
No, it was broader than that, thankfully. The Nifty Midcap 150 also finished up. It closed at 19,427.8 easers.
Okay, and the gain there?
That was up 107.2 points, or 0.55%. Solid.
Solid, yes, and small caps.
They join in, too. The Nifty Small Cap 250 ended at 15,452.10 seconds. That's a gain of 69.65 points, about 0.45%.
Okay, so positive across the board, even if the Nifty 50 had that standout performance.
Exactly. And just to wrap up the equity picture, the Nifty Total Market Index covering everything closed at 12,185.70.
And the gain on the total market?
Up 153.35 points, which is a healthy 1.27%. So, yeah, definitely a good day for Indian stocks overall.
Yeah, if it reflects some strong underlying sentiment. Okay, let's switch over to the bond and currency side. What were the key moves there?
Right. So in the bond market, the benchmark 10-year government security yield, it actually dipped a little.
Oh, dipped. Interesting.
Yeah, no, down 3 basis points to close at 6.41%. And the reason seems pretty clear.
Let me guess. RBI action.
You got it. This followed the RBI announcing a pretty substantial bond purchase program, $400 billion worth.
Ah, okay. So injecting liquidity, that makes sense for the yield drop, supporting the system.
Exactly. Seems like they want to make sure there's plenty of liquidity sloshing around.
A proactive move. And what about the rupee? How did it fare against the U.S. dollar?
The rupee actually gained some ground. It closed at 85.68 per dollar.
Up slightly then.
Yep, up 0.1%. And the thinking is, well, two main things. One, those strong foreign equity inflows we saw.
Right, foreign money coming in helps the currency.
Definitely. And two, the U.S. dollar itself was a bit weaker, perhaps due to, those ongoing global trade jitters.
Okay, so domestic strength attracting funds and a bit of external dollar weakness. Got it. Now let's dive into the big news stories driving things.
Okay, top financial and economic news. First up, as we just mentioned, that RBI liquidity push. It wasn't just the $400 billion bond purchase.
No, there was more.
Yeah, they also announced a huge $1.5 trillion 43-day repo operation.
Wow, $1.5 trillion. So they're really serious about ensuring ample liquidity in the banking system.
Seems like it. Really making sure the financial plumbing is working smoothly.
Crucial for keeping credit flowing. And you mentioned foreign inflows earlier. Was that significant?
Hugely significant. Just on April 15th alone, foreign investors were net buyers of Indian equities to the tune of $793 million.
$793 million.
Yeah.
In one day.
Yep, that's a massive vote of confidence, wouldn't you say? Shows growing belief in the India story from overseas investors.
Absolutely. That's a very strong signal. Okay, zooming out, what about the global picture? You mentioned trade tensions, U.S. markets.
Yeah, the global scene was, let's say, a bit more mixed. U.S. markets definitely saw some volatility.
Why was that?
Concerns about potential new tariffs are swirling again, and, the old worry about inflation hasn't gone away.
Right, tariffs and inflation. That uncertainty probably weighed on the dollar index, too.
Exactly. The dollar index weakened. And interestingly, what often happens in times like these, gold prices shot up, hitting record highs again.
Ah, the classic safe haven move. People getting nervous about the global economy turn to gold.
Seems like it. And just quickly on energy, Brent crude oil?
Where's that sitting?
Hovering around $66.03 per barrel. Still very much influenced by, geopolitics and the usual supply-demand dynamics.
Okay, $66. So Not drastically high, but still a key factor. And finally, any news from closer to home, specifically the tech sector.
Oh yeah, the Indian tech scene is buzzing, still a real hotbed of activity. Startups are pulling in significant investment.
Oh dear.
And we're seeing lots of announcements about companies expanding, launching new products. It just feels very dynamic.
That's great. Lots of innovation and growth there. Okay, so we've covered markets, news, global factors. Let's try and pull it all together. What's the overall market outlook and analysis based on all this?
Well, I think the main takeaway is that the positive momentum in the Indian stock market looks pretty well supported right now.
Supported by what, mainly?
That combination we talked about, strong corporate earnings coming through, there's really hefty foreign inflows, and generally okay global cues despite some jitters.
And the RBI's role.
Crucial, I think. Their accommodative stance, actively managing liquidity, that's definitely helping maintain investor confidence.
So the domestic picture looks reasonably bright, but you mentioned global jitters.
Yeah.
What are the key risks we should, keep an eye on?
Definitely. We can't ignore the outside world. The main things to watch are probably developments around U.S. trade policy. Any new tariffs could cause waves. And, of course, those persistent inflation concerns in major economies.
Right. Those could easily inject some volatility back into the markets, couldn't they?
Absolutely. So worth monitoring those global headwinds closely.
Got it. Okay, let's maybe drill down a bit into specific sectors. Any areas looking particularly interesting right now?
Sure. Well, banking and financial services seem to be in a decent spot. They're benefiting from better credit growth and improving asset quality, which is always key.
Makes sense. What else?
Information technology. IT continues to attract investment, doesn't it? Driven by that whole digital transformation wave that's still ongoing globally.
Right, a long-term trend.
Yeah.
How about consumer-focused sectors?
Consumer goods look pretty steady, decent demand, and they're making more inroads into rural markets, which helps growth.
Okay. And anything else catching your eye? Pharma, perhaps?
Yeah, pharmaceuticals still have a positive outlook. Good export opportunities and, ongoing innovation in the sector are driving that.
Okay, so strength across a few key areas there. Good to know. As we start to wrap up this briefing, could you maybe give us a quick closing summary?
Sure. I'd say, in a nutshell, India's financial markets are showing real resilience. They're being propped up by solid domestic economic strength and very proactive policy from the RBI.
Despite the global uncertainties.
Exactly. While those global headwinds are definitely there, the overall outlook, for now at least, remains positive. It reflects that underlying strength we have here.
A clear and positive summary. Thanks.
Yeah.
Now, before we sign off, any calls to action for our listeners?
Yes, absolutely. If you haven't already, please do subscribe to the Finwell Daily Brief so you don't miss these updates.
It's good advice.
And for, more detailed analysis, maybe some real-time thoughts, connect with us, SOS Finwell, over on LinkedIn. We share a lot more there.
Right. Definitely check out the LinkedIn page.
And finally, as we always do, let's end with our quote of the day. This one is from the investing giant, John C. Bogle.
Ah, the Vanguard founder. What's the quote?
He said, "Do not look for the needle in the haystack, just buy the haystack."
Just buy the haystack. That's quite relevant after discussing today's broad market rally, isn't it?
It really is. Maybe speaks to diversification, index investing, looking at the big picture rather than trying to pick just one winner.
A timeless piece of advice, I think. Something to reflect on.
Definitely. Okay, that's all for today's Finwell Daily Brief. Thanks so much for tuning in. We'll catch you next time. Stay financially well.